You have an overseas sub, you calculate the goodwill in the local currency. So you should therefore be very anxious and very concerned that you show your workings as to which currency you're dealing with, because it's very confusing as a marker when you're looking at a bunch of numbers and it's are they in dollars or are they in crowns? And for yourself, when you look at the numbers quickly to copy them out back into the answer, yeah, you've got to make sure. So we're calculating the goodwill in crowns. So I need to know the fair value of the parent's investment in crowns, the controlling interest, which is 7. I've got the NCI, which I think is determined at fair value, and that fair value is 3. And then I've got the fair value of the net assets at the date of acquisition, which coincidentally was given to me at 7, which therefore means that my goodwill is there at 3. So my goodwill is full goodwill because NCI is at fair value, and that goodwill is 3. Now, is there an impairment loss? No. So, I don't know, look, humour me here slightly. If I retranslate the goodwill, the opening balance on the goodwill is 3. The opening balance on the goodwill is 3. Humour me here slightly. The impairment loss is 0. Yeah? Humour me here slightly. And so therefore the closing balance is 3. Now, the goodwill at the year end has to be translated at the closing rate. Any impairment loss will be translated at the average rate, and the opening balance will be translated at the opening rate. So I think you've got the right answer, yeah, because what you actually want to have on your balance sheet is goodwill of 600. That's the figure that is on your balance sheet. That's the key takeaway that is on your balance sheet. That's the intangible asset. That is goodwill translated at the closing rate. But when you originally bought the company, you bought the company and you would have originally calculated the goodwill to be 3,000. Now, it's gone down. It's not gone down because of any impairment loss, because 0 divided by 4 is still 0. So, why has the goodwill changed? The goodwill has changed by 400, and that is not an impairment loss, that's an exchange loss. And that's again a balancing figure, and that's a BAL fig, and that's a loss, and that is going to OCI. Do I split this? If there was an impairment loss, would you split the impairment loss? Yes, you would split the impairment loss. You would split the impairment loss between the retained earnings and the NCI. Why? Because NCI is at fair value, so goodwill is in full, so this is effectively subject to a split. Be logical, be consistent. If you are prepared to split the impairment loss, then I think you should also be prepared to split the exchange loss, yeah? And that exchange loss will be split between the OCI, other components of equity, yeah, on a 60-40 basis. Going. Go. if we have a group profit and loss account and other comprehensive income, it will be quite a surprise because it was very recently examined in December, and it is something that only crops up once every 5 or 6 sittings. So I want to be fairly slow on this because it's not my intention to work a full question, but I want to talk you through the process of opening up the exam paper and suddenly seeing a group P&L. Maybe the person in front of you in the exam starts to cry. Maybe the person to the left of you in the exam walks out. You stay. You stay. You draw a breath. It's going to be difficult for you. It's going to be difficult for everybody else because it's a surprise. So it means that probably the marking guide and the markers get a little bit more generous. Yeah? Now, I know that if it is a group profit and loss account, the structure of the exam is the same. Now, by that I mean you've got the parent lined up, you've got the subsidiary 1 lined up, you've got the subsidiary 2 lined up, already there for you, and paragraph number 1 is all going to be about the first sub. Paragraph 2 is all going to be about the second sub. And paragraph 3 could be, I don't know, an impairment review, and paragraph 4 could be some problem with depreciation not being provided, share-based payments not being accounted for. There will be other accounting issues that you have to deal with. So it's the same structure to the question as the balance sheet. In other words, paragraph 1 is the sub, then you have paragraph 3 and 4 are dealing with accounting issues. So therefore, draft the P&L after processing paragraph 1 and paragraph 2. So it's the same structure to the question as a balance sheet. So I would do paragraph 1, first sub, paragraph 2, second sub, then I'd open up my final answer, P&L, and I would start to prepare my P&L as best I could. Yeah? Then I would come back and I would sort out paragraph 3 and paragraph 4 for accounting issues. Something that you need to be aware of is this. Switch on your brain. When you do a balance sheet, you probably can switch off your brain. Oh, I'll do working 2, and then I do working 3, oh, calculate goodwill, oh, then I do NCI and post it all. You kind of almost get into a zombie kind of ability to process, and then occasionally, oh, I don't understand what that is, I better think about it. But you know, the more balance sheet questions you do, the more you see them, the more you become familiar with that process. Unfortunately, the same routine is not particularly applicable to doing a P&L. When you're doing a P&L, you've just got to think a little bit. And the question you've got to ask yourself is, why? Why am I doing the working? You do not need to calculate goodwill unless you're trying to work out an impairment loss. So the objective is to find the loss. Yeah? You do not need to do a working 2. Now I know we've done working 2s and always found out land as a balancing figure, but in the exam, if it was a P&L, you'd be doing working 2 to find out PPE as a balancing figure, because you would want to work out depreciation. So think. That's all I'm asking you to do, is to think. The information will be there. If there's a disposal, you've got to do the profit or loss on the disposal. If there's an associate, you've got to do equity accounting. So you don't dive in automatically and calculate retained earnings, because retained earnings is a balancing figure. Yeah? Working 4 and working 5 and working 6 are giving you balance sheet figures. So you have to think a little bit. It's the same technique. If you're doing a P&L, your outcome is income and expenses. If you have a group profit and loss account and there is an overseas subsidiary, the revenue will be in dinars, the cost of sales will be in dinars, the distribution cost will be in dinars, the interest will be in dinars, the tax will be in dinars, and you would have to translate all of these figures at what rate? Average rate. So these would all be translated at the average rate. And you would calculate an exchange difference for OCI, see above. You would calculate an exchange difference on other comprehensive income, see above. I don't think it's going to be there. I don't think it's going to be there. Yeah, but I don't know for sure. Yeah? It's not in the style of the examiner to have kind of, back-to-back or recently repeated P&L. So, but it's on the syllabus, and if it was there, lots of people would trip up. I hope you guys would be able to hold your head. There's a couple of questions in the material. Have a look at one of them. But just let me repeat the process. You've got the P&Ls lined up in front of you. You've got a paragraph of information about the sub, and presumably there will be an impairment loss, or presumably there will be some kind of calculation to do for the depreciation, or for the unrealized profit, or for the disposal. And you would do those calculations. And when you've done those calculations, lay out your profit and loss account. Parent plus sub plus sub. For God's sake, remember to time apportion. So if you've only owned one of the subs for 6 months, take 6/12 of each time. It's a very repetitive process. If one of the subs is an overseas sub, average rate, it's a very repetitive process. If there's a disposal, you know how to calculate the profit or loss on the disposal. We've done that. If there's an exchange difference, you know how to calculate the profit or loss on the exchange difference, and that goes in OCI. Yeah? Keep calm, be logical, be neat, use your referencing purposes. Yeah? Right. Is it lunchtime? Sadly not. Sadly not. We have an hour. We have an hour and 10 to have a look at some accounting issues before lunch. Then when we come back from lunch, we can have a look at cash flow. But let's think about some accounting issues that we can have a look at before lunch. Let's have a recap on one of these technical accounting standards, which is IFRS 2, share-based payments.